Derek Kowalczyk, Chief Investment Strategist at CFC Seymour Limited, joining us live from Hong Kong. You know, Derek, the Fed statement, the Fed decision somewhat got buried, didn't it, underneath all the AIG headlines? And maybe that's appropriate considering that had AIG failed, gone to the wall, gone bankrupt, it could have created huge systemic risk. In light of the fact that it seems to have been all averted, what does this mean for the markets and the economy now?
I think that the most important significance of the bailout of AIG will be the turnaround in market sentiment. I believe that the major risks to the financial system in the U.S. Are now behind us, which is Freddie, Fannie, Merrill, AIG, and we know what is happening with Lehman already. So there's a lot more clarity, and therefore I think that we are now in the middle of a sort of turnaround in market trends. Whether today or within the next few days, an upward move in global equity prices should begin, and that is likely to improve confidence among the U.S. consumers as well. However, not all risks are off the table because the root cause of the current problems are falling prices of U.S. houses, and this trend has not been averted yet. So it is possible that there will be further write-downs and that the economy will slow not only in the US but globally, but I believe that the sentiment turnaround is taking place.
You know, I would really love to believe that, Derek. I would really love to believe that AIG is about as bad as it can get. That's been averted, and now hopefully sentiment can improve on the global equity markets, well, the global markets in general. Nonetheless, isn't there going to be another similar situation just around the corner? I mean, a lot of people are saying, look at WAMU. Isn't it possible, after being downgraded essentially to junk, that that could be the next bankruptcy, the next crisis du jour?
A number of U.S. financial institutions are in very weak positions, and Washington Mutual is unfortunately one of them, but its systemic implications of continued problems with WAMU are not as dramatic as what AIG could bring about. So I think that with the worst out of the picture, the improved outlook should become priced in. The WAMU risk, either the government will step in as it has in case of Bear Stearns and AIG if it needs to, and if it doesn't need to, it means that the situation is not that dire. So I still think that all in all, outlook is going to gradually improve.
Let's certainly hope so, Derek, and I'm going to get your investment tips in just a second. But first of all, on AIG, the Fed is stumping up $85 billion to save AIG. It's already stumped up many billions of dollars to save other institutions. Where is all this money coming from, and what are the broader macroeconomic consequences of that? I mean, obviously the Fed can either borrow it, get it from the taxpayer, print it. I mean, what does this all mean for the economy and also the US dollar further down the line?
Sure. If the Fed provides funding to, say, the $30 billion to Bear Stearns, or now $85 billion to AIG, they are doing it against collateral, and as a central bank, they don't need to borrow that money because they can sort of create an amount of liquidity in their own currency. The situation can be different in terms of the Treasury potentially supporting Freddie and Fannie, because this would require issuance of more treasuries. But in any case, the balance sheet of the Fed is going to look shakier, but I still think that it's big enough to absorb it. But Treasury yields are likely to move higher, and the curve should steepen as the Treasury has to issue more securities to pay for its involvement.
Derek, then very quickly, if you do believe that we might be at an inflection point in terms of a turnaround for market sentiment, how would you be investing right now?
I think that turnaround in sentiment means higher appetite for riskier assets. So I would increase positions in those that suffered because of risk from outside and not due to their own internal problems. So currencies and even equity markets in Asia that have been sold off because of global contagion are good candidates for a turnaround at this point. And you can see that, for instance, You know, the Korean won today is sharply higher because sentiment has improved, although in case of this currency, internal problems may still weaken it further. But a broad range of Asian currencies has gained, and I think that those gains against the US dollar should continue through the end of the year.
Thank you so much for joining us today. Darek Kowalczyk, Chief Investment Strategist at CFC Seymour. Well,